Okay, we have quite a lot of different answers. Yeah, so it's inheritance tax we're looking at. So I know why you've all said 12,500. That's because it's the personal allowance. So that's good because you need to know that as well. But for inheritance tax, there's this annual amount that you can give away to people each year is £3,000, and that will be exempt from inheritance tax. Let's have a look at the next one. Let's see if we get on better with that one. Okay, well done, Diddy on the top. Let's have a look at the next one. What is the nil rate band? Remember, we're looking at inheritance tax. You don't need to remember this. It's given to you in the tax tables, but you will probably know it very well by the time you do your assessment. That's right, yes. So a lot of people never actually have to pay inheritance tax because if your assets are only worth up to 325,000, it's going to be covered by the nil rate band. It's this rolling thing. It kind of refreshes once every 7 years. Okay, let's have a look at the leaderboard. Okay, we've got Sue on the top. Bit of a change. Next question. We've got 5 questions altogether, so 3 to go. I just answered that one, didn't I? I forgot that was the next question. That's right, yeah. So it's like this rolling 7-year thing. You always have to look back 7 years when you're looking at how much of the nil rate band has already been used. Any change at the top? Yeah, Sue holding on the top there. Okay, question 4. Again, you can look at this up in your tax tables. Yes, majority have it again. So 40%. So when you die, any assets that are chargeable to IHT after you've taken off your nil rate band, you're all going to be paid at a rate of 40%. That was close on that question. No change on the top. And final question. Oh yes, very good on that one. That's right. Again, you can look it up if you need to in the assessment, but it's about having that awareness of these exemptions existing. So yes, a parent can give 5,000 to a child. So that is from each parent and that will be exempt. Okay, final leaderboard. Oh, well done, Sue. Sue hung on throughout most of that. Thank you to everybody for participating. Fantastic. Okay, so we're going to have a look tonight at task 12 and task 13. So these are both about inheritance tax. As you know, if you've been on these sessions before, I like to have a look at the examiner's report. So this can be found on the AAT website. You can have a look in the personal tax section. If you haven't looked at the examiner's reports before, they're quite handy to have a look at before your assessment, because the examiner will tell you which questions people did well on, which they didn't do so well on, and also they talk about the weaknesses and give tips on what students could do to perhaps do a little bit better on those questions. So it can be quite a useful thing to have a look at. So if I just show you the graph first of all. So overall, we're looking here at task 12 and task 13. So you can see they're kind of dealt with okay. This line here, that's the pass rates. You can see about 65% are passing task 12. Somebody's not on mute. Let me just check if I can pick you up, but you cannot do it at your end as well. Oh, can't see anybody. Okay. Task 13 not answered as well, only 50% on that one. So we'll have a look at both of those. So if I go to the comments, I'm going to go to the final page to see what the examiner said. Okay, so task 12 first of all, I'm just going to turn my screen around. It will go upside down for a moment. Then just one sec while I turn that around. There we go. Okay. Okay, so task 12. As it says, task 12 is looking at the basics of inheritance tax. Normally lots of sort of small bits to fill in. There might be some sort of true or false multiple choice questions in there. And it says people did better than the previous year. Over 65% passed that question, so we're getting 70% on that question. And people aren't using the full amount of time. Now, each of these questions is worth 6 marks. So maybe you've got 1.2 minutes per question. So you've got no, it's more than that, isn't it? Because you've got 2.5 hours of personal tax. So you've got 150 minutes. So that's going to give you about 9 minutes to do each of these. And they said that people aren't taking the full amount of time on this one. They're working through it quite quickly. Sometimes they do suggest perhaps people do it a bit too quickly. If that's the case, take a little bit longer if you need to. So the things that people tend to get wrong on this, so the weaknesses, just a bit of a lack of understanding on the differences between the 3 types of lifetime transfers. What are the 3 different types of lifetime transfers that they're talking about there? And that's it, yes, we're looking at the fact that we could have a pet, so potentially exempt transfer. How long do we need to live for that to not fall under inheritance tax? That's right, so if we live for more than 7 years after making the gift, that won't be chargeable at all. We've got our CLTs, our chargeable lifetime transfers. What would tell you it's a CLT? One specific type of transfer we'd be looking at there. Yeah, so that would be anything into a trust, so that will be chargeable straight away. And also we have our exempt transfers. Okay, next thing they said is not reading the detail to determine the 7-year limit. So it's one where you want to use your fingers or perhaps draw a timeline. Sometimes that might help, but count carefully where your 7 years are. And then the next bit it says is not using the tax tables effectively as the exemptions are all provided. They said perhaps spend a bit more time. There's quite a few tick box questions, and I think perhaps sometimes people answer this too quickly. You know, sometimes you get a question where it might say which of these are exempt or which of these are not exempt. If you miss that word not, you're going to answer the question the wrong way round. So that might happen sometimes as well. So given that they've referred to the tax tables, let's have a look at those as well before we look at task 12. So again, remember, you can obtain the tax tables on the AAT website. They're probably in your training providers notes that they've given you as well. So if you go into the personal tax section in the AAT website, you'll find this. You can't take it into the exam, but remember, it will all be on the screen, so you can look this up on the screen. So they do give us quite a bit for inheritance tax. Section 14, we've got the tax rates. So we have there our nil rate band, 325,000, and don't forget this residence nil rate band. Residence nil rate band has only been around since 2017, so it's likely to be quite a popular thing to test you on. We've also got the rate, so we've got the death rate of 40%, and then remember, if there's any lifetime tax to pay on the CLTs, that will also be subject to 20% at the time the gift is made. If you die within 7 years, you're then going to get the 40%, but you can deduct the tax you've already paid, so you're not going to end up paying 60% overall. And another thing that's really good is remember that this only works, unfortunately, for couples. Where you have a spouse or civil partner, and they die before you and they don't use their nil rate band, or they don't use all of it, and that's pretty common because spouses will often leave all their assets to their surviving partner, which would all be exempt. We don't pay any inheritance tax on transfers to spouses, so you kind of wasted your unused band, but it's transferable. So actually, if the first spouse hasn't used their nil rate band or their additional residence nil rate band, we could be looking there in total. So if you've got 2 lots of that, that you'd actually be able to have an estate worth up to 950,000 before you'd have to start paying inheritance tax on it. We've also got in here the tapering relief. So remember, this is where you, unfortunately, the person didn't survive for 7 years. And I apologise for we having to talk about something that's a little bit morbid in these times, but unfortunately, that's what this tax is about. But imagine if somebody managed to survive for 6 years and 11 months, you would then probably feel quite sort of annoyed, shall we say, that you suddenly had to pay all this tax. So we have this tapering system, which seems quite reasonable. So if there was between 6 and 7 years between the date of the gift and the death, then you would actually get an 80% reduction. So you can see the longer you survive after making the gift, the bigger reduction you'll get for that taper relief. So always use that table, make sure you get those percentages right. And finally, you've got your exemptions. Do remember that all these exemptions apply to lifetime gifts only, not on the death estate. People do get a bit muddled up with that sometimes. So the small gifts, the 250 per year, the marriage exemptions, the annual exemption. Remember, with the marriage gift, you've got to look at the relationship. When they talk about one party to another, obviously they're talking there about the 2 people who are actually getting married to each other, or the civil partners. So it's all there to look up, so do make use of that. So with all that in mind, let's have a look at task 12. Did anybody join late and not have a copy of this? Because I can just pop that into the chat box again. Lovely. All right, we will make a start on this then. That's fine then. Let me just pop that in quickly. Okay, there you go. They're both in the chat box. You should be able to download at your end. I'll send out answers tomorrow as well. So after class the next day, I'll send out the annotated answers for tonight's session and also then your pre-work for next week. So let's have a look at the first one. And so you can see in task 12, we've got lots of little bits to do. And so first of all, Harry received 30,000 from his grandmother in her will to put towards his wedding. Can the marriage exemption be deducted? Do you think that's true or false? Sue said false. Anybody else want to? That's right, yeah, because when we just looked at that table, we said it only applied to lifetime gifts. So that one is false. Because this is only applicable to lifetime gifts. Okay, the next one says gifts to political parties are exempt transfers. What do you think about that one? Yes, all correct answers coming through there. Gifts to political parties are exempt. So that one's true. So very factual, those ones. Okay, let's have a look at B. Vivian. So in 2019-20, Vivian made the following gifts. And they will always tell you if you'd made any gifts before. So she's never previously made any gifts because that's going to impact on the annual exemption that's available. So let's have a look at these in turn. So first of all, we've got 50,000 to her husband. What do we think about that one? Yeah, that's to her spouse. So that one is going to be exempt. She then gave 3,000 to her best friend. Now what I'm going to do is just, you might want to do this on a bit of paper in the exam, is I'm just going to put these in order because we have to look at them in date order. So first of all, what type of gift is it? A gift to her best friend. Exempt, CLT or pet. Yeah, it's not to a trust, so it's going to be a pet. So she has made a gift to her best friend of 3,000. What can we deduct from that? That's right, Kari. We have to use this year's annual exemption before last year's. You can carry it forward 1 year, but you must use this year's first. So we can deduct from that the annual exemption for 1920, which happens to be 3,000. It has been 3,000 probably for at least 20 years. It was 3,000 when I was doing my tax studies. Now that's interesting that Basia said 250. The problem with the 250 is that it's only going to apply if you make a gift of up to 250 to that person. If you give them 300, you can't say, okay, 250 is covered by the exemption. As soon as you give them more than 250, the whole thing becomes chargeable. So then you've got to use your annual exemption instead. But that's fine. That pet is fully covered, so we wouldn't have any amount that we'd have to pay tax on. So the next one we have December 2019, gift to a trust. What sort of transfer is that? That's right, it's to a trust, so it's a CLT. So again, let's just write down the value. 1,500. We've used this year's annual exemption, but we've still got last year's available because we didn't make any gifts in the previous year. So we can deduct from that the annual exemption the previous year. As I said, it's been 3,000 for ages, so we only need to use 1,500. So there won't be anything there. Now, the reason why I'm working through them all is because the question just says to us, what's the maximum value for the gift to her daughter in January 2020? But because we've got to look at how much annual exemption is left, you actually need to go through all the gifts in turn to see how much is available. The marriage allowance, yes, Kari's ahead of me there. So let's have a look at the gift to her daughter. So January 2020, gift to her daughter. So we know that will be a pet again. It was 10,000. Always deduct the marriage exemption before the annual exemption, because, you know, if the gift was a bit smaller, we might have then been able to keep the annual exemption for another gift. So I probably ought to just squeeze that. I'll just put it in here. So we'll deduct the marriage exemption first, give to her daughter. So we've got 5,000 we can deduct for that one. And we've also, as Kari said, still got some of last year's annual exemption left. We've still got a further 1,500. Because remember, we've got 3,000 there in total. So that reduces the value of the gift for inheritance tax down to 3,500. So that's probably the most tricky part of this question. Are there any queries on that one? You can see why you've got 9 minutes available when you look at that, because you did have to do a little bit of work for that one. Yeah, you're right, but then we've then got to look at the death estate as well. So that's why they've actually put in there what would be the maximum value for inheritance tax purposes, because that would actually give you the value of the gift, and then we can see if we've got any nil rate band, but we'd have to have a look at other, you know, other things around it as well. So they're just focusing on the gift, specific gift there. We haven't got enough information to do more than that. Okay, all right, part C. So in the assessment, this would be sort of a drop down box. You would just pick the answer. So this is the small gifts exemption is, and we can very quickly look that one up in our tables. That's right, £250 per tax year per, got choice of 2 words there. The transferor or the transferee? It is the transferee. If you get a bit muddled up with your alls and your e's, because we get this in a lot of situations, I always think about employers and employees. I think about sort of the employer pays money to the employee, the transferor is giving something to the transferee. So think of it as going from the all to the e. So yeah, so you can give up to £250 away every year to as many people as you like, and that's all covered.
Correct.
Okay, and next bit. Danny's married to Sandy. You might not have known this one. It says they jointly own a house with 50% ownership each. So Danny dies in June when the property is valued at 200,000, and we want to know the value of the property in his death estate. What did you think for this one? So we've got, anybody want to go for the one in the middle? Yeah, let's have them all. Right, so I think a lot of people probably would have put 100,000 as being half his bit. It's a bit of a legal thing, this, what we're looking at, because it says they jointly own, they're referring to something called a joint tenancy. And what happens with a joint tenancy is that when one person dies, their half automatically transfers to the other person. So the answer is actually nil, because Danny's share will automatically transfer to Sandy. And so then we're looking at an exempt spouse transfer. There is 2 different ways you can hold property. I think this is a bit more than what you need to know for your AAT exam, but you can also have something called a tenancy in common. So if they'd have had a tenancy in common, Danny would be able to decide who to leave his share of the house to, but with a joint tenancy, it just automatically passes to the other person. Again, it's got to be, because we're looking at that spouse and civil partner exemptions, no. So no, if it was going to go to, say, your brother, then that's not going to be covered by the exemption. Okay, so that's task 12. So all sorts of bits and pieces can come up on that. A lot of questions on this do look at the exemptions. So as I say, do know where they are so you can look them up. Be aware of what is a pet. A pet is basically any gift to an individual if it's not to a spouse. And remember, anything to a trust will be a CLT. If you can remember that, you're going to get a lot of task 12 correct. So on to question 13. So this will be the last question on the paper. And as I said, the pass rate is a bit lower, about 50%. Now I think part of that is just, oh, let me get that where you can see it. There we go. I think part of that is just because it's the last question. So if you look at any of the last questions on the AAT papers, for a lot of the level 4, they're often written questions as well. You're getting a bit tired. You might be running out of time. So, do practice the AAT assessments on their website before you do your assessment, and practice them to time, and do not go over on questions. Level 4, you're not going to walk out of the exam half an hour early, probably. You do need to make use of all your time, but you want to work out how much time you've got available for each question, because you're far better off moving on to the next question than struggling on with the with the one that you're on. Because what's going to happen is when you start the next question, all the bits you're going to get marks really quickly. You don't want to be worrying about the final 2 marks that you're not too sure about. Just keep moving on, so that when you get to task 13, you've still got 9 minutes left. So it's another 6-mark question. So 12% of your assessment altogether is on inheritance tax. So you've got another 9 minutes. And I know what it's like if you actually got to this question and you've only got 5 minutes left, because 9 minutes isn't long, is it? If you've only got 4 or 5 minutes left, then you start to panic and then you're not as efficient as you could be. So make sure you've got enough time. Remember, you don't have to do them in order anyway. So if you like IHT, some people do, I like IHT, I probably wouldn't leave it until last. I'd probably do those a bit earlier. So do them in whatever order you want, but do make sure you don't forget a question if you don't do them in the correct order. Let's go back to the examiner's article first of all. Let's see what he said or she said about task 13. Okay, so it's an open response task. So what they mean here is you have a blank grid, and this will be humanly marked. So the examiner does want to see you show all your workings, make sure it's very clear what your numbers mean, that you've got your narrative in there, not just the figures, so it's very easy to follow. People are taking a bit longer to complete it, it says. And performance has fallen. So in 2018, about 65% were passing it. It's only now about 50%. So we want to be in that 50%, don't we, or more, hopefully, that are passing that one. So again, let's focus on the weaknesses. Now this is an interesting one. It says not ensuring that the current tax rules are known. Now I think this is probably because, as I said, the residence nil rate band only came into play in 2017, so it's only actually been examined for a couple of years. So it might have been people perhaps doing retakes and they had the previous year's notes. They might not have known about the residence nil rate band. You will all know about this, so that's not going to apply to you. Confusion over when to apply the annual exemption. So remember, only on lifetime transfers, you must use this year's before you use the previous year's. Confusion over how to apply the nil rate band. So students sometimes apply the full 325 to both lifetime transfers and the estate on death. The estate on death is effectively the very last thing we do. So if we've got a question where there's a death, first of all, we need to look at any lifetime transfers made within the previous 7 years. We will deal with them first. They will be using up the nil rate band. So when we get to the death estate, we've got to look back at the nil rate band we've already used on the lifetime transfers to see how much you've got left. Also, there's a confusion over the application of the tapering relief. So again, make sure you're comfortable with those. And knowing the difference between lifetime transfers and the estate on death. As I said, deal with the lifetime transfers first, then finally do the death estate. Okay, let's have a look at our question. Okay, so we have Carl. So Carl died on April the 11th, 2019, and he left an estate valued at 895, which included his home worth 500,000. So as soon as they tell you we've got a home, you want to be thinking about the residence nil rate band. Does depend on who you leave it to. Who do you need to leave your house to qualify for the residence nil rate band? Your spouse, it's going to be exempt anyway, so that we wouldn't need to use it for that. Yeah, we're looking at children, your grandchildren, so it's got to be a direct descendant. If you leave it to your spouse, you're covered by your spouse exemption. Okay, Carl had a wife. Ellie died in 2015. And her estate had used 70% of her nil rate band. So we've still got a bit left. And remember, that's just the nil rate band. It means we can also still use Ellie's residence nil rate band. Although Ellie died before the residence nil rate band came into play, as long as the second spouse has died after April 2017, you can use the residence nil rate band of the first spouse as well. One more bit of information. So Carl had made a gross chargeable transfer in 2014, valued at 200,000. So we only care about that if it's within 7 years of death, which it is. So that will be chargeable at death, and you won't end up paying any inheritance tax because it will be covered by the nil rate band. But that then is using up the nil rate band, so there's less available for the death estate. Carl left his estate to his son, so there's no exemption there. It's not spouse or charity or political parties. So we are going to be paying IHT at 40%. But we've got quite a bit we can deduct. So the question, calculate the inheritance tax payable on Carl's estate. And very important, show your workings in the table below. So you'll have this nice empty grid and then a box at the bottom to pop your answer in. So we can start with the chargeable estate. Sometimes they might, give you the individual assets and liabilities. It's just a little mini statement of financial position. Just pop in the assets, take off the liabilities. But they've done all that for us. They've given us the value of the estate. So we can start with our chargeable estate, which is 895. And do work to the nearest power and don't start abbreviating to thousands. So we can use Carl's nil rate band. So we've got nil rate band for Carl. So we know that the nil rate band is 325,000. But because we had that gross chargeable transfer of 200,000, that's going to use up some of the nil rate band. So we need to deduct 200,000. That will get used up against the gift. So do show all this, show your workings, not just your answer. So Carl's nil rate band remaining is 125,000. Now don't forget that Ellie didn't use all hers. So we can have some of that as well. So we've also got the nil rate band for Ellie. How much is available from what Ellie didn't use? Yeah, so they've said 30%. Now what's interesting is that it doesn't matter if the nil rate band has changed. It probably hadn't because they kept it the same for many years. But the nil rate band used to change every year. But you haven't got to go back and find out what it was in 2015. You're just interested in the percentage that she didn't use. And the percentage that she didn't use was 30%. And so you can apply that to the current nil rate band. So you're absolutely right. That's going to give you another 97,500. So again, make sure you show all those workings. You know, if you accidentally put 70% instead of 30, the examiner can still see that you've understood that you need to apply it to the 325, so you might still get a little bit of a mark for it. What else can we deduct? What did we talk about earlier? Yeah, we've also got the residence nil rate band. So again, we can deduct it for Carl because he's left his estate to his son. It's got to be a direct descendant. So again, make sure you look it up in your tax tables. This does change each year at the moment. Since they introduced it, they've been putting it up by about 25,000 each year. So it's 150,000 for our tax year. And we can also deduct the residence nil rate band for Ellie because first of all, it didn't mention that she used it, and secondly, she couldn't have done because it didn't exist in 2015. So it's another 150 to come off. So just add that up again. You know, make sure you perhaps check it through twice on your calculator so you don't make calculation errors. But you should come to a figure of 372,500. That's it, Kim. And then we've got one more thing to do, which is just to work out the tax. So again, just show you working for it. So we've got an estate of 372,500 subject to IHT. And remember the death tax rate is 40%. So that will give you tax to pay of 149,000. So I'm just going to pop that in the box as well, but always show your workings, don't just pop the answer into the box. So tapering relief is going to apply to lifetime gifts, but there wouldn't have been any tax on that lifetime gift, and they haven't asked us about that anyway. There's no tapering on the death estate because you die, that's your assets at the date of death, so there's nothing to sort of look back over to taper. So yeah, just watch what they're asking you. They just want to know the tax on the estate. They're not looking at any tax on the lifetime gift, but that would have been covered by the nil rate band anyway. How do you feel about inheritance tax? It's not always everybody's favourite. But often when you look at the AAT questions, they might be a bit more straightforward than some of the ones that you've done in your course notes. The important thing for inheritance tax is the layout. So if you follow the same layout every time, particularly when you're looking at lifetime gifts, remembering to take things off in the right order. If you make sure you know the sort of little pro forma layout, it makes it a lot easier. Lovely. Okay, so we've covered both questions. Do practice some more of them. So I'll stop recording the session now, but if anybody wants to stay on for any further queries, please do. Tomorrow I'll email out the annotated notes from tonight, and then some more work to have a look at for next week, and also the recording from tonight's session. Thank you very much, everybody, for joining us.